Thank you for joining us at xm.com for the Daily Market Comment by Marios Hadjikyriacos. I'm Cristina Marujos. The market's roller coaster ride continued Thursday, with U.S. equities recovering substantial losses to close into the green, while the defensive Japanese yen surrendered early gains. At the heart of this turnaround in mood were some remarks by the World Health Organization, which declared the coronavirus a global health emergency, but also argued against trade or travel restrictions. The cool response seemingly calmed some nerves about contagion. Other segments of the market weren't as cheerful, though. Both the Aussie and Kiwi plunged and continued to drop today. One might argue that this is consequential considering the close trading ties that Australia and New Zealand have with China. However, U.S. Treasury yields also fell notably yesterday and continued to retreat today, very much in lockstep with the commodity currencies, signaling that investors are still playing defense despite the recovery in stocks. The Fed's expanding balance sheet might be driving this divergence between the stock market and the bond and FX markets. While the Fed officials have repeated over and over that this is not quantitative easing, markets are certainly behaving as if it is, with an abundance of liquidity pushing investors further out into the risk spectrum, which ultimately benefits stocks. Therefore, movements in the S&P 500 are probably not an ideal barometer for how worried traders are with issues like the coronavirus, and currency moves may be a better signal instead. The British pound rose through the roof on Thursday after the Bank of England kept interest rates unchanged. Policymakers highlighted the strong rebound in the post-election survey data, but also warned that unless the hard data show a similar improvement, then a rate cut may still be needed down the road to boost the economy. This was enough to catapult the pound higher as near-term easing expectations were priced out. Focus now shifts to the hard data, but with nothing on the calendar for next week, the pound might instead take its cue from any Brexit moves, as the negotiations are set to resume soon. The UK officially leaves the EU tonight. This was today's Daily Market Comment at xm.com. Have a great weekend.